Good morning, everybody. As you join us, welcome to today's session. We're just going to give everybody a chance to come into the room. So if you can see us and hear us on the screen, pop something in chat. Tell us where you're joining us from today, and we will get cracking in just a moment. And I shall just start to get my slides ready. We've got some morning alls coming in, so hopefully everybody's hearing us okay. And let's start this slide. Right. So thank you for joining us, everybody. Welcome to this fairly unique and one-off webinar that we're running today. We are going to be finished for 11 o'clock. I'd love this to be interactive. We have a fantastic panel of speakers with us today. So if you have any questions at all as we go through the session, pop them in the Q&A box for us. We'll get to as many as we can, and any we don't get to, we'll try and pick up and find ways to respond to you after the session. So firstly, I would just like to welcome my co-host today. It's unusual for me to have a co-host, but I'm delighted that David Tuck is with us today. How are you doing, David? Nice to see you.
Hi, Will. Morning. Thanks for having me. Really excited for the session today.
Excellent. And I'm going to come to you fairly quickly as we get started, David, to kind of kick off some of the technological conversation today. But let's just introduce the rest of the panel that are joining us today for this session. I'm going to go through as you appear on the screen here, so you know when you're coming. So I've briefed everybody that they've got to keep this to a minute, so no pressure. But Indy, just introduce yourself, please, and AREX.
So I'm Indy. I work at AREX. AREX is an primarily invoice financing solution, but we have a tech platform which is underpinned by data, and we give access to our investor marketplace and provide a range of different financial instruments that we're looking to implement in the UK market. We work exclusively through accounting partners, and there are many reasons for that. But we're really about providing SMEs access to capital and to get a cheaper cost of financing through us. So that's me, and that's AREX.
Excellent. Thanks, Indy. Ralph, coming to you next.
Hi, I'm Ralph. I'm the CEO and co-founder at Cresco. We are a open banking payment solution focused on accounts receivable. So that means the invoices that you send out via potentially Xero or QuickBooks or other accountancy software can get paid via open banking payment rails rather than via PayPal or Stripe or manual bank transfers. So that's us.
Excellent. Thanks, Ralph. And Tom.
Hey, I'm Tom over at iWalker. I work specifically in the iWalker Pay side of iWalker. Similar to Ralph and Cresco, we're tackling those traditional payment problems by building better payments. So that's what we do, is we help businesses get paid. And I work specifically with kind of top 100 accountancy firms.
Excellent. Thanks so much indeed, Tom. And Pierre.
Yeah, hi everyone. Well, I'm Pierre. I created Libeo with two co-founders from a pain that we had in our previous experience as business owners. Libeo is a SaaS solution for SMB and accountants, offering accounts payables and account receivables automation. We try to bring the best of technologies into a simple and seamless experience, from managing invoice to paying or getting paid through natural workflows in the product, as well as integration with key accounting systems. We have a strong presence in France, that's where we're from, but we launched in the UK at the beginning of the year, and we really focus on providing value for accountants to help them focus on delivering more value than repetitive tasks for their clients.
Excellent. Thanks very much indeed, Pierre. And Becky.
Hello, I'm Becky Danks. I'm head of product at Comma. Comma is an open banking bulk payments platform. So basically we allow accountants and SMEs to pay anyone and anything that requires multiple payments in one go. So that's their supplier payments or their payroll. And you can access that via our app. And also we have a Pay with Comma integration, which sits within the platforms of other people.
Excellent. Thanks so much, Becky. And thank you, everybody. Really slick, all within a minute. So thanks so much indeed. So briefly, the agenda, then I'm going to drop the slides and we're into conversation here, guys. So we've done some introductions. I'll set the scene for why we're having this conversation in just a moment. But the plan is over the next 55 minutes or so, we're going to talk about fintech payment innovation. As you've seen from the introductions there, we've got a wide range of payment apps. It's either helping you help your clients make payments or get paid smarter, quicker, more effectively. So that's the general theme here. So we're going to look at why is there so much innovation in this space around payments? What's the problem that's being fixed? And what's the driver for these solutions coming to market? And one of the things that I've talked to the panelists about is, do we have a situation where open banking came along? You heard a couple of the panelists there talk about open banking. So was it a case of open banking came along and everybody said, wow, there's an opportunity here to think differently about how we do stuff? Or was it, as Pierre particularly pointed out, problems that were identified either running SMEs or whatever? And it may be a bit of both of those things, but we're going to talk to the panel about some of those things. What's the opportunity for accountants and bookkeepers, both for you running your firms, but equally how you can further support your clients by using this new category of technology? And perhaps a more contentious issue here, we're seeing lots of talk about are the banks kind of creeping into accounting? Do they want to cut the accountant out of the process? So I'm really interested whenever I talk to particularly kind of banking related apps that we have this conversation about what are the challenges here with the convergence of banking and accounting. Are the things that accountants and bookkeepers need to be worried about? What are the things that they can be doing to actually leverage the benefit of what's going on here rather than kind of have fear about the fact that they're being disintermediated out of the process? And then finally, we're going to ask all of the panelists to give you a key takeaway, something to think about on the back of the session. So that's our plan. I'm going to stop sharing my slides now. And before I come to David, really the context here for me in terms of we worked with India AREX to talk about this session. And when I think about my accounting firm, for those that don't know me, I didn't do an introduction for myself, so I probably do that very quickly. So I founded Final Clark in 2007. We were probably one of the first 100% cloud practices globally back in 2009. And that's why this is really interesting for me, because I was talking to a number of the panelists here about the fact that it's 2012 was the last time that we rolled out a new piece of technology in our accounting firm that I genuinely felt had relevance across our entire client base. And interestingly, it was payments. And back then it was Go Cardless and it was Stripe. And prior to that, it was Receipt Bank, now Dext. But since that time, we haven't come across a product that we've been able to say, this has wide enough appeal that it should be relevant to every one of our clients. So that's 10 years of limited innovation. And I get that we're a bit of a unique beast, and other people have stumbled across some of the technology that we've been using since we started using it 10 years ago. But I've said for a long time that I think there's been a lack of innovation, and that may be because it's simply allowing the software the delivery element of that to catch up. So as accountants and bookkeepers, have we needed time to catch up with the innovation the technology has delivered over the past 15 years or so? Not saying that's the answer, but that's my view of it. So I'm really excited that we're seeing we've got 5 partners here on this call, and it's I'm sure they would all agree that they're a representation of some of the finest, but there are lots more out there as well. So this is a massive space. Yet, do accountants and bookkeepers really understand the opportunity yet? I don't think they do. So for me, today's session is really about raising the profile of this as a space, in the way that we saw, particularly kind of 2011 to 2013, an awareness of what was going on with Zero and others at the time, in terms of there is a new way of working here, and I think payments is at this pivotal point now. And how do we get the message out there? So that's why we're here today. That's what this session's about. So before we go into some of the questions for the panelists, David, for those that don't know you, give us a quick intro, and I'm sure it will explain why I'm delighted to have you co-hosting with me today.
Brilliant, thanks, Will. So yeah, very briefly, for those who don't know me, my name's David Tuck. I'm an accountant, finance director by background. Then founded and led a business called Chaser, which people be a number of people will be familiar with, which was credit control software. So founded and led that, won Xero's App Partner of the Year award in 2016. And for the last kind of 18 months, I've been consulting in and around the accounting tech space. Businesses looking to partner with accountants as a channel to market. Fortunate to work with two of the attendees today in AREX and Comma. Which is great on how they partner with accountants as a as kind of users, as partners for their software. And I'm launching my next business as we speak, Mayday, which is all about the automation of intercompany recharges. If you thought payments was exciting, just wait until you get into the automation of intercompany recharges. But we'll talk no more about that today.
Thanks, David. So before we go to the panel here, you sit here from kind of the tech side rather than accountant in practice. So between us today, we have both perspectives. We've talked about open banking. Open banking is what's enabled most of the technology solutions that we're talking about here. So from your side of the fence, the things that I've said around innovation, around the opportunity, where do you sit on this? What do you see in terms of the opportunity? And is 2022, aside from intercompany recharges, of course, is 2022 innovation really about payments?
Yeah, fascinating. And the question I was really keen to ask the panelists. So between you've all raised kind of institutional, at least one round of institutional capital, and so in your respective kind of investment decks, from my own experience of this, you'll have needed to answer the kind of the why now question. So what is the why now question for your respective businesses?
Where should we go? Should we go with Becky? Looks ready. So let's go to you first, Becky. Why now?
Well, I think it's a really interesting question, and I mean, I think all of us who work in the open banking space have seen, a regulatory rollout of endpoints only be kind of second to how the market has grown massively. I mean, open banking payments in general has seen a huge uptick in the last couple of years, and there was a bit of worry kind of in the 2019 sort of era that actually the account information was going to be the one that was the win, and the payments were going to be a secondary piece. But we've really seen that not be the case. I mean, we're currently, I think there's something like, I can't even think of the figure off the top of my head, but I think it was around 5 million or 500,000 extra payments that have been made kind of month on month than we were seeing previously in the years before. And for me personally, about why payments and why open banking now, Will's absolutely right. We haven't seen many opportunities to have an additional access point into the payment services landscape in the way that we've seen open banking be able to inject in since kind of, its advent in 2017 and onwards. What kind of came first, the chicken or the egg? Is it a regulatory driver, or is it the market that really wanted us to be there? And I suppose my big commentary on that would be that, the PSD2 and the reason why we have open banking in the UK at least is kind of two factors. It's one to give consumers control over the data so they can make payments and execute things via third parties and have more control. And I think that was a big problem to solve. I think that definitely was an issue. And then secondly, it's all about competition and innovation in the market. And so what I would say is that I think initially payments and in the open banking landscape has given consumers and small business owners and the accountant clients the ability to to make those payments and solve that problem for them. What we've actually seen now, we're a little bit more mature in the market, is, you know, the reason why all of us as businesses are on the call is because we've been able to kind of exceed what the legislation has given us and provide more and more innovative services.
Yeah, perfect. And Ralph, what's your take on the opportunity right now? Why is it? Is it open banking, or is it something more than that in terms of why there's this readiness?
No, I think it's open banking. I think fintech historically has been a lot more fin and a lot less tech. I think a lot of the sort of great companies in the past have potentially had sort of very shiny websites, but a lot of manual processes in the background, which aren't very scalable, which is why the valuations on fintech companies compared to out and out software companies is, you know, minimal. I think even the coolest companies out there that are really great, the Monzos of this world or the Stripes, they've just rebranded existing products. So Monzo's core card is still a MasterCard system. Just MasterCard was starting to white label their solutions to third parties. Stripe is, again, it's still running on Visa and MasterCard, which is 60, 70-year-old technology. So I think open banking presented this sort of technological development, which allowed you to change the way the processes were done for the first time in quite a long time. And that's how we looked at it. We said, this is cool technology. What can we do with it? And then we focused on the biggest pain point that we could identify.
Yeah, that's really interesting, because that kind of answers, so from what Pierre said in his introduction, and what you've said there shows that actually my question in terms of, was it open banking created this opportunity, or was it a pain point that drove it? That actually it's kind of a bit of both. One couldn't have happened without the other. And your examples are really interesting in terms of Stripe, and you go cardless, which I mentioned a while ago, is simply just a smarter way of doing direct debit, isn't it? Largely. So those changes weren't viable without open banking, I guess.
Yes, exactly. These and they are great companies, and so I'm not taking anything away from them, but they focus very much on the user journey and the front end experience, but the infrastructure and the back end really wasn't very different. And I guess you know, we obviously have to be a consumer focused, product focused company, so it needs to be very convenient for the end user, but we're definitely using new technology that hasn't been used before, and that's how you can not just provide a better user experience, but also save time and money. Yeah.
And Tom, I mean, Iwoka's, correct me if I'm wrong, but Iwoka's probably of everybody here has been around the longest, and even that isn't that long, is it? So I mean, what for you is there something here in terms of, is the opportunity really now, or were you guys kind of super early to market? What's your take on this in terms of the timing of the opportunity?
Yeah, of course. So we actually just celebrated our 10-year anniversary, which is pretty exciting. For us, the opportunity is kind of now. So we got a BCR grant a couple of years ago, and actually as part of that, I guess to David's question, part of that pitch deck was, we're getting businesses money really quickly, but like when they're getting paid, then they're not getting paid, and what are the barriers to that? And that's kind of with, I guess the tech has generally got better, especially when we look at the open banking side of payments, to kind of what Ralph said. Obviously, like the front end, usually if you, for example, you go buy a pair of trainers online from JD Sports, you have all these payment options and you can kind of choose how you pay. It's super easy. But if you're an SME, you're struggling to get, especially like if you say, for example, you're a builder and you send out your invoice, it's a really poor back end process, because what's happening is your customer is paying, but you're waiting days for that money to come through, and you're also paying really high fees for that. So kind of the tech advancements, as it were, has really paved the way for businesses to have a better back end experience and actually get paid. And when we did research on our 50,000 customers, one of the biggest things is that 90% of the businesses offered payment terms, but only half of them actually got paid within that payment process. And a third of those businesses saying, look, we want to get paid easier, and we're going to start asking for money up front and in advance, but they kind of highlighted that their payment providers and their options just weren't maybe built for purpose, because that's kind of the real challenge is that payment provider built for your purpose. And that's kind of where the open banking and the tech that we've built has really come from. It's this massive opportunity that people realize that actually we need to get paid now, and we need to get paid on time.
Yep. Excellent. And Pierre, I mean, you mentioned that for you it was very much a kind of a pain point that you spotted as an SME. How did you make that transition? And again, is it I mean, open banking? We talk about open banking from a UK point of view. You're in France. What, any difference there, and anything that kind of made it the right time for you guys?
Yeah, so as I mentioned, that's a pain that we had as we were previous business owners, that managing invoices and paying them is really a nightmare. And to answer your question, I guess there's a matter of maturity, right? So there are two kinds. The first one, people, right? What we see with our clients is that they cannot accept that the experience they have in their personal life in terms of finance, paying, and so on, is not replicated into their business life, which is usually the case because the apps, the experience is quite poor in terms of business apps. So they're willing to bridge the gap, and they're ready for it. They know that it's possible now, and they want the same kind of experience in their private experiences, in their work experiences. Sorry. And I guess the second maturity that we have to highlight, which is quite strong, is the work that has been done by states and banks to be able to provide the building blocks, right? So why now is also because banks are now ready. And they start at least to be ready for most of them. And I guess everybody around the table will agree that we are building on those building blocks the great experiences that we want to offer the market. And that's also why it's now, I guess.
Yeah, and I mean, you look at the US just as an example of an alternative market that's a very big market, and you guys understand the challenges of this better than I will. But we hear about how far behind the banking system is in the US. I mean, is your market kind of restricted at the moment by kind of limitations of banking in the US, and anyone can kind of just answer to that if they've got some knowledge on it. Are we in a really fortunate position in the UK and Europe that we have a banking system that enables this stuff to happen?
I'd like to jump in. So in the US, you've got problems with federal and state regulation, but actually, this is a really interesting subject. Banks have struggled to scale for 2,500 years. Monte dei Paschi is the oldest bank in the world, and it's been in Italy for 500 years. You know, they have 4 board meetings a year, 2,000 board meetings. They've never managed to move into Austria. So fintechs really struggle to scale. I mean, Wells Fargo, one of the largest banks in the world, not a single international customer. And I think potentially open banking is the first time, because you're sitting on top and you're potentially what we would call an OTT player and over the top. So it's a little bit like Netflix before they started producing movies themselves. They were just able to connect to local infrastructure by providing a very thin surface layer, which is more, it's easier to scale internationally. But fintechs have really not done very well scaling compared to, again, out and out software companies. And that's for a string of reasons.
Okay, interesting. And Indy, from an AREX point of view, opportunity, why now?
I think to Tom's point, actually, there's something around the market context, and Pierre sort of touched upon it as well. It's a market context of the fact that SMEs have gone through a period where they've had to embrace remote working and embrace different ways of working. And that has then caused us to look at all of the different applications that we use. And there's definitely been, with open banking and the regulation changes, there's been some accessibility of data that we've probably then been able to enjoy and innovate with. But there are other data sources that have made it easier for us to then decentralize a major part of what was sitting with just the banks. And because then that accessibility of data has meant that we've been able to build upon it and use the data in more effective ways, and not just sort of rest on the fact that we need to go with the legacy systems and, you know, you need to go to your bank manager, or you need to rely on sort of like one relationship with your banking provider. Instead, we're able to then take that and use it in different ways so that SMEs can just generally get access to their own cash quicker, but also then use it as a tool to then try and negotiate better with their own suppliers. So things like, you know, as Tom was touching upon, you know, it's not just that you can get the money in your bank quicker for your own business operation, but it's the fact that then you as a supplier can pay quicker and then negotiate better with the relationships that you have across the board. So I think for AREX, the why now has been very much about this equality of access to data and using that data more effectively to build a better picture of the business's health, and then get access to that money quicker. And that decentralization didn't really exist before, because I suppose we all followed the same dogma, which was, you know, this is the way that it's always been done. And I do think that contextually, COVID did change all of that as well.
Yeah, and so David, we got some answers to your question there, and a point that Indy made there kind of brought back memories to me of very early on in Capitalize's journey. They were using the mantra, "The bank manager's dead, long live the accountant," which kind of bridges us quite nicely into the next topic here, which is really around, so with all of this, what's the opportunity for the accountant? And that point about is there an element of good fortune here that we see banks retracting and closing branches and limiting access, and we've just gone through a process of moving our main bankers because as Final Clerk, because we just struggled to get the kind of support that we needed from a bank. So is this an opportunity for the accountant? But at the same time, and again, jump into the final question a bit as well, is there also a risk because the banks are saying, hang on a second, we're kind of losing out a bit here, we need to rethink, and actually we need to perhaps be the accountant as well? But we'll come to that one in a minute. But opportunity for accountants, what's your take on that, David?
Yeah, I mean, I think it's a fascinating question, and I think, you know, if I think about the sort of the consulting work that I do with businesses looking to partner with accountants, I have this model of AIU, awareness, introduce, or use, to think about how you're going to work with accountants as partners. Is it a case of awareness, you know, that they come with an issue? I'm struggling to get my invoice paid on time. I've got too much tied up in working capital. You know, what can I be doing about this problem? And absolutely, you know, the accountant as trusted business advisor wants and needs to have an answer to that question. And then at the, you know, introduces the more proactive side to that. Are you going to, you know, you're going to partner with accountants who then get on the front foot to go out and introduce your product, your solution to clients, which is more sort of lucrative in terms of an opportunity, but that's a harder one because you've got to get people to, you know, like go about new behavior that they haven't before. And then the use side of things, does this enable accountants to better provide services that they have done already, or start to provide services that they aren't right now? So, you know, what I'm doing with Comma, for example, this idea of virtual payment runs, which hasn't been possible previously, where you're providing the virtual finance function to clients. You know, is this now something that you know, this provides a tipping point to enable you to provide? So I think it's about understanding that map with regards to awareness, introduce, and use. The awareness is always there because you want, when the accountant gets the question, for them to be able to answer it accordingly. But equally, you know, thinking really broadly about, is there a use opportunity there to underpin a service that they already provide, or a new one? And I think, you know, I'd love to kind of put that, you know, that's a question best answered by the solutions themselves.
Yeah, and then you make the point on the outsourced finance function, which certainly in our world is our big growth area, and we've spent the best part of kind of 13 years now building the right blend of people, process, technology that enable us to deliver that really effectively. It's most certainly a massive opportunity, and the big bit missing from the jigsaw for us for a long time was payments. So again, another compelling reason why we're here. But let's take your question and put this to the guys here in terms of where do you see the opportunity for your accounting partners? Where have you seen value already from that you've been able to provide to your accounting partners? Pierre, let's come to you first on that one.
Yeah, sure. Well, I think Dave mentioned it, but there are two ways to look at this. The first one is obviously a huge opportunity to create new business, right? So it's a way for accountants to sell new services and to move away from tasks that don't create much value, and that it's the same kind of principle that, for example, Receipt Bank, now Dext applied, is a way to remove the task with low value added and move to a more consulting role, very close to clients, create value for them, and even run payments for them in terms of our clients, for example, the accountants using the platform. So it's really a new way to develop revenue.
Yeah.
The other way to look at it, I guess, is really a risk-based approach. Should you not embrace this kind of technologies, I guess, and that's what we observe, some clients will ask you for it. So if you don't, then there is a risk of losing clients and losing revenue by not transforming to this kind of new approaches.
Yeah, I mean, all of you will be very familiar with the product adoption model and everything else, and the profit opportunity that exists in the innovation and early adopter phases. And I'd like to think we've been living testament to that by getting in a kind of innovator stage and stuff that we did. And there is a massive opportunity for firms to get first mover advantage here. And again, another reason why we're here talking. Indy, what's your thoughts here? What's the opportunity? What should firms be looking at?
Yeah, I think so most accountants are sort of moving towards what is, this advisory and FD services and being able to provide a sort of virtual finance function. And, the part of that has been making sort of recommendations of different applications in the space, as Pierre said, Dext and other pieces of software that solve the efficiencies within the business and the opportunities to kind of save money in manual processing. But the next step of that virtual finance function is being able to give them advice on a range of different options where it comes to applications, where it also comes to that core finance function, the cash and the idea of payment. And it is so critical, it underpins every part of the operation. And I think that to date that has not been serviced in the same way, because it's been something that accountants have maybe seen and observed and seen the options that are available, but maybe that haven't quite understood the role that they can play in making the same sort of recommendations when it comes to this as a piece of technology, as as having something within their own toolkit that they can then make recommendations of. And if they really want to fulfill that virtual finance function, that virtual FD function, a part of it is then making those recommendations based on the data that they can see and having a range of different weapons in the armory to use.
Yeah. Perfect. And if anybody listening has any questions at all, do pop them in the Q&A and we'll pick those up as we go through as best we can. Tom, your thoughts on this? I mean, 10 years, you've seen some of your partners realize some of the opportunity, I'm sure.
Yeah, absolutely. And I was making a note there, so apologies to hosts and panelists that got my note there. The way that I see it is, it's really an opportunity for accountants to solve more problems for their clients. And the more problems you solve for your clients, the stickier the client's going to be. It's kind of that simple, right? It's if, say, for example, I take my iPhone, I've got my Mac, I then put them together and I've got, all of a sudden, if I copy, it's so simple, but I copy a note on my iPhone and I can post it straight into my Mac. That simple piece of technology will stop me moving to a competitor like Samsung, but it also makes me want to look at other features. And that's exactly the same as what accountants are doing. You're using this great tech to solve more problems for your clients. And the more you can do that, and the more you seek for that, the better business you're going to build. But also on the flip side, and I think this is so often forgotten is you as an accountant have the opportunity to try this new technology yourself. And that's a massive opportunity. Probably 60-70% of the work that I do with accountants is actually using it internally first, because an accountancy firm is a business at the end of the day. It's not accountants live in their own work. An accountancy firm is a business. And using these tools are going to give you opportunities to run a better business, so you can then run a better service for your clients.
Yeah, and I can't help but jump on that, Tom, because a large part of my mantra is that accounting firm owners need to think about their firm as a business and not a practice. It's you're not practicing to be an accountant. You are an accountant and you're running a business. So let's think about running our firms like a business. And that covers all sorts of things: working effectively, make sure you're charging the right money for the value that you deliver, and so on. So apologies, I couldn't help but jump in on that point.
Yeah, but it makes sense, right? Because if you know how something works and how something breaks, then you're going to be able to better advise your client and see opportunities. Like, we look at payments of, oh, let's get paid quicker. Or actually, if you've got a client that has a really small profit margin and they're losing 2% getting paid, all of a sudden you change over to a free payments model. You've just saved them 2% on their bottom line. It's really simple changes like that.
Yeah, perfect. And Ralph, the opportunity right now.
What, for accountants?
For accountants, yeah.
I think it's sort of reiterating what everyone said, is that, you know, the more processes that you can automate, the more that they can provide sort of further value added consultancy work. You know, and ideally the happier your customers are, and happy customers don't leave you. So that's probably the main issue. But yeah, I would definitely echo the panelists' points hitherto.
Perfect. And Becky, anything to add on the comments so far?
No, I think, yeah, just to reiterate what everybody said, like the accountants are in such a strong position because you actually hold a relationship with with your customers and with your clients, and they trust you to make decisions and things for them. So don't underestimate that, and don't underestimate how that allows you the right to play in maybe slightly more peripheral business areas. So like payments, or like, you know, kind of offering them other consultancy products and services in addition to what your day-to-day is. Think of it all an opportunity, I would say. And you know, open banking is the innovation that's there is available for you to capitalize on what previously was the you know, only kind of allowed for, you know, bankers and the banking services themselves. So absolutely think about your business, and also think about the verticals that you can then bring into your business and start offering those yourself.
Yeah, and it's looking at these evolutions, and very early on, I would, when we started kind of tapping into the early app ecosystem, I would talk to people and say that effectively what we could do now is the equivalent of somebody 20 years ago putting an ERP system in for £250,000 or whatever in a large organization, and the app ecosystem gives us the ability to build something comparable for the micro and the SME business for a few £100 a month, and what we're seeing is just another evolution, isn't it, that the small and micro end of the business are being given access to tools, technology, processes that have been the domain of large business for so many years. And that's really exciting. And we as the accountants are the catalyst to enable this to happen. So as Becky said, it's that point about we sometimes are too reluctant to tell our clients what we think they should do. And they pay us to give them advice. So when people say, oh, my client won't move on to this product or whatever, my challenge is always, well, have you asked them? And the answer is normally, well, no, because we just know they wouldn't. And it's like, but they pay you to give them advice. So be bold and so on. But thank you for all of those answers. David, anything to add on that before we jump into a question we've got and move into perhaps a slightly more contentious area of discussion?
Final point is just, and it sort of links to the original why now question of a context from the last couple of years that I think is really important in this regard, that there's a huge amount of behavioral science about how hard it is to change people's behavior. And the last couple of years, we've seen with furlough, with bounce back loans, accountants being asked, delivering value in a way that just hasn't been the norm previously. Yes, there will have been exceptions to that, but now it's much more sort of, common and familiar to be coming to my accountant about how do I access financial support. And that tipping point has been passed, has been necessitated by external factors. And so I think there's an imperative, and there's also an opportunity now that would have got there over time, but I think there's sort of 10 years has been accelerated in terms of behavior change into 2 years because of the climate of COVID and the role that has necessitated accountants to play, very sort of stressfully, very, very importantly. And I think there are huge opportunities for them coming out of that now, because clients have a different mental model when it comes to the role that accountants can play.
Yep. Yeah, perfect. Thanks, David. So a question, do we think the banks will follow the rule of unlimited link duration, or will they see it as a minimum standard and agree 90-day links are more secure for clients and stay with that? Ralph, your reply came to us as panelists. So did you want to expand on that with your answer?
Oh, sorry. So the access to the data can be continued so long as it's agreed with the AISP for the original purpose. They won't need to go through the re-authentication, which is the boring part where you have to get redirected to your bank and log in, and there's still a lot of room for improvement there from a UX point of view. But,
yeah, and certainly
that's what they've been told to do. Whether they'll do it or not, let's see.
And I know that was a big frustration when the GLs moved to open banking for bank feeds, is just that whole look. It's hard enough getting information from clients, but getting them to kind of actually have to renew the connection every 90 days and so on. So yeah, a real challenge. But anyway, so we have just under 20 minutes left. I would really like to get your thoughts on perhaps some of the risks, because we've talked about the opportunities for accountants here, but those that follow in this space, we see what there's this whole debate about the GLs. So firstly, the general ledgers, the zero, the QBOs and everything else. What's their big play? Is their focus the end client? Has the accountant channel been merely a route to gain market share before they just say, actually, you know what, we don't need the accountants anymore, let's go direct to the end SME? And then on the flip side, we've got the banks, and we see that the GL, so QuickBooks in the US has QuickBooks Cash, a bank account that will pay people 1% a month interest on any money sitting in the account. That's aggressive in terms of challenging the banks. So we then see RBS acquired Free Agent, and Free Agent had a bit of a play towards, hey, we can do the accounting as well as provide you the software. So it's a risk. We saw some of the neobanks and what they were doing, and somebody shared with me they were at an event in France with 5 founders a couple of years ago, where they said quite openly that in 10 years we will have cut the accountant out of the equation. So should accountants be concerned? What's the opportunity? Is it a real threat? Let's go with Indy. Let's start with you on that one. What do you think? Big question.
Yeah, it's a big question. I mean, naturally, I think that as technology evolves, that you could say any industry, any market, any profession is at risk from being replaced by a robot or from technology or bots or whatnot. But I think that for us, like, we see the accountants as a partner in this industry. So we're very much, for the model that we have, and the investor sort of marketplace that we have, the accountants act as someone that's financially literate and are able to then also provide the right level of, it's another data point for us to validate the kind of businesses that we do work with. So for us, it's a really key partner. And I would say that, you know, on an AREX level, no, but then if you look at the market wide capacity, embedded finance and alternative finance in the UK alone is currently sitting around 4 billion, and actually that is set to increase this year. And that's because technology providers are seeing that there is an opportunity to then go and provide different types of options directly to the SMEs at the source, at the point that they are trying to transact. So yeah, it would be, everyone would be naive not to think that this is something that could have an impact on their profession. But in the end, the people that win are the ones that then run into it and lean into it and think, okay, well, let me just at least try and get a grasp of these different, you know, innovations, and then I am able to leverage them in a different way from the way that the technology would, because the accountant will not be removed from the equation. The point that I think that you made, Will, and it was following on from Becky's point, is that in the end, it means that you really have to stand for something. So you really have to be bold and make the recommendations. And then you can say that actually, no, you know, even with the technology providers, people want the expertise, they trust the accountants. And that is why we need to make sure that, you know, that we're able to shine a light on this space and show the value of it for every accounting partner that's in the industry.
Yeah, and lots of nodding there, which is all reassuring. And just as we go around, something else just to think about that I just kind of came to a moment ago. We saw a while ago attempts to kind of converge and amalgamate banking and basic bookkeeping, Coconut being kind of one of the prime examples there, and they've taken the decision recently to strip the banking bit and focus on the software in terms of MTD. So is there something in that says actually people want a bank that's a bank and they want an accounting system that's an accounting system? So just another kind of angle as we think about this potential threat area. Becky, lots of nodding. So and I'll come back to you, Indy.
Oh, sorry, Indy. Do you want to go? No, sure. I was just, it just really resonates with me, this conversation. And I think it's important to think about this from the bank's perspective. So in headquarters and in board meeting rooms up and down the country, mostly in London, there are bank leaders having a conversation about how they cannot get disintermediated. They're petrified that they've had to, on a regulatory landscape, open up banking endpoints for bank account access and also for payment initiation. And they're worried that third-party providers, accountants, and anyone else who can access this data is going to offer a beneficial service and a more personalized, trusted service to their customers, which means that they lose opportunities to cross-sell, they lose opportunities to do whatever it is that they want to do. And I just think I would really focus as an accountant on your opportunity, because you already are so close to that customer, to provide those services for them based on the endpoints and the services that are available from companies like all of ours. You really have an opportunity to enhance the offering that you can give to your customer and to your client, which the banks actually, even if they might want to acquire free agent, or they might want to do these big things, that's a much bigger decision for them. That's huge, and it's going to take a long time for them to pivot on getting that customer back and acquiring it back, and it might not even be successful because they're so big and they struggle necessarily to focus on prioritizing that type of relationship building. So I suppose I would encourage the accountants on the call to think about capitalizing on what you do best, on the trust that you build with your customer, your client already, offering them more products and services in the periphery of what you do today by using, partnerships like with Comma or with the rest of these businesses, and then not saying don't worry about the big banks. Like, obviously, as Indy mentioned, we all need to be thinking that no one's lunch is safe, because they're scrabbling for ways in which they can start having a better relationship with their customers. But I suppose the message for me is that you guys are in the winning seats. Like, this is the place that I would want to start from, rather than being on the other side of the fence.
what a flip that is. It's me talking about the accountants being disintermediated, and here we are now saying actually it's not the accountants who need to worry, it's the banks. So I'll take that all day. Pierre, what's your take on that?
I think I quite agree with Becky here. I think the risk for accountants is where you stand in terms of value you create, right? If for accountants that really sell a kind of automation, task processing, and this kind of things, I guess technology will at some point automate this, and there is a risk, and it can be by players like us, but accounting solution, even banks, sometimes will offer more and more technology to automate those tasks. So I guess the switch need to happen in terms of providing more value. Becky used the word trust, which I like a lot, trust and expertise. I guess that's why accountants cannot be intermediated. It's because they have this place, this advisor role to each business, whatever the technology, right? People need to have someone to discuss with, to be comfortable with. That's the role that is that cannot be transformed by technology. I mean, it can be empowered, but not intermediated, I guess.
Yeah, perfect. Thank you, Pierre. Tom, your thoughts on this?
Yeah, I may lose friends, but I think if anybody says that they're going to cut out an accountant completely in 10 years, they are so far removed from what accountants are doing at the moment. And yeah, like if an accountant didn't change over a 10-year period, then yeah, their business might be challenged. But any business that doesn't change over 10 years is going to be challenged. So that kind of blows my mind when I see and hear that. But I think one of the biggest risks for accountants, and I've seen this a lot from when I worked at Xero, and is taking on too much. There's so much great technology, and we've got a bunch of accountants here now that are doing the right thing, evolving their business by learning about these new technologies. But the biggest risk is just doing too much at once. I've seen so many accountants that have got Xero, have got Dex, have got loads of other apps, and actually their whole Xero migration has stalled because they're doing too much at once. So it's like actually take one thing, whether that's payments in or payments out or whatever it is, and double down on that, then go on to the next thing, because you'll make such better progress nailing one software than the other and evolving your practice that way than you will try and make massive leaps at once.
Yeah. And I think it's kind of interesting point you make there about the change, because I Waka have been around 10 years. We've been floating around in this space for kind of 15 or whatever it is. And I go out and I still talk about the lack of adoption. And I still have a view that we're only at 20% adoption in the UK marketplace of firms actually using cloud technology effectively. And I've been saying 20% for about 4 years, but I think I was just over ambitious when I said 20% 4 years ago, because I still believe we're kind of at that point now as well. So, and that's the real risk here, is that they've had firms, accountants, bookkeepers of this technology's been there for 15 years, and many are still not using it 15 years on. So the opportunity is there, but the threat is also there if they don't do it. And if it's taken them 10 years to get to the point where they realize they need to use Xero or QBO or Sage Cloud or whatever it is they're using, how long is it going to take them to realize what you guys are able to deliver for them, and the efficiency and the automation and the value that they deliver to their clients through using the tools that you guys have? Ralph, come to you, and I'll come to David to kind of start thinking about wrapping up. So the threats for the firms right now, Ralph.
I think, like the panelists, I don't think there's much of a threat to accountants. They're probably in a pretty good position. I think the Luddites have been concerned that AI is going to put them out of a job. But, day by day, there's very little technology I see that shows any form of basic intelligence, let alone that can sort of beat the Turing test. So I think as cool as our programs and softwares and tools are, they'll only automate a sort of fraction or a certain percentage of the work that accountants do, which will allow them to focus on more value-added products. So I'd love to be able to say that, you could just plug and play and be out of a job, but there's still a lot of work left, I'm sure, for accountants to do.
Yeah,
and hopefully more value-added work.
Yeah. Absolutely, and thank you, Kirsty, for your comment there, which comes back to that point around accountants not thinking like businesses. because they don't invest in a human resource to integrate this technology properly, and Kirsty says hence the 20% adoption. And that's the point. It's that growth mindset and everything else that unfortunately we see sometimes not being as prominent as it might be in other sectors. So David, I'm going to ask everyone for a key takeaway shortly, but you've sat and listened to everything that everybody said there. You've been around the space for a long time yourself. Is there a threat? And if there is, what do firms need to do we think, to overcome it?
Sure. And I think, so absolutely there is a threat, but there's also a tremendous opportunity, and they're two sides of the same coin. I mean, I'm quite fond of thinking about this in the model of people to be familiar with Maslow's hierarchy of needs: physiological safety, love and belonging, esteem, self-actualization. I have a kind of similar model that I apply to, the needs that clients have of their accountants, or in respect of accounting. The most basic being compliance, information on top of that, then insight, then efficiency, and then what I somewhat loosely call outcome actualization. So, how to go about achieving my goals as a business. And the VAT return is a really good example for this, right? Like, you go back 10, 15 years, and for a small business that didn't have the kind of expertise of how to do this, you could justify kind of charging quite a bit of money for submitting the VAT return. And in the zero and, cloud accounting world that we live in today, you can't justify charging anything near the same amount of money because so much of it kind of gets automated. So, it's a threat if you think you can kind of live and, thrive at the same kind of, level of that hierarchy, addressing the same needs. Absolutely, it's a threat. But the technology, as we're seeing great example today, going back to the point about, the options that have been demonstrated over the last couple of years about value that can, deliver to clients, the opportunity to move up that hierarchy, it's very, very, it's like to automate compliance and even to automate parts of the information. Yeah, sure, you can see that being successfully addressed. Automating the delivery of insight, the, tailored efficiency gains to the client's business, to understand what they're looking to achieve and help them achieve those outcomes. That's really, really difficult to kind of automate. And so, I think, like we've seen across history, the Industrial Revolution, for example, what we'll see, and we're living in a kind of the fourth industrial revolution of accounting. What we'll see is, existing jobs will kind of get largely or fully destroyed, and sort of existing tasks that can be delivered, but it will lead to, and we're seeing this right now, this webinar is kind of proof of the creation of amazing opportunities to deliver value to clients. So I think it's a feast or famine situation. It's a threat with a kind of caveat and an asterisk on that of, unless you choose to see it as an opportunity.
Yep. Perfect. Thanks, David. So we are just about at the top of the hour. So I'm going to ask everybody for a top tip for everybody listening in just a moment. Before we do that, just so you know what's going to happen, we will send a recording of this out to all of you that attended today, and we'll also provide contact details for each of the app partners that have taken time to join the call today. So if you want to hear any more about their solutions and how they can help and give you the opportunity to capitalize on this opportunity, we will share that with you. But we have a couple of minutes left, so let's get these top tips. What should firms do right now to make the most of the opportunity that's available to them? Indy, coming to you first.
So I think the main thing that from our perspective is to maximize on cash flow using it as a tool. So one of the things that we kind of touched upon is obviously we used invoice financing in AREX as that kind of tool. And so often in this industry, either you think that the invoices are kind of quite outdated as they currently in their current format, or the fact that they're not able to give you the speed or accessibility of cash. And I think one of the things that we're saying is all of us are working with them in different ways, and it's about taking a second look and not seeing it as a last ditch approach, but instead a first resort approach, because if you're able to get the cash in the bank quicker for your clients, you are performing that virtual FD function. And that's what that we really think, you know, is so important for the accountant to do in the evolution of their own role.
Excellent. Thanks, Indy. And Ralph?
Our primary value add is having invoices paid that are sent via Xero or QuickBooks or QuickFile or other accountancy softwares instantly online, pretty much pushing over the manual bank transfer, the PayPal and the Stripe process, and then handling with the whole reconciliation. So I think key things that are sort of settled with accountants is from the referencing point of view, that's very clear in the bank statements. It's not a opaque message that's come from GoCardless or Stripe. It's a very clear reference, which is sort of INV/1001. So it's sort of saving the time and the money from the accounts receivables perspective.
Perfect. Thank you. Pierre, top tip.
Yes, so I guess the moment is now. We've discussed that. So my advice would be get to know the market. Not a single solution will cover all your needs for depending on the size of your clients and the complexity or their need. So get out there. There is, as you mentioned, a first mover advantage here, which will create thought leadership, branding for your practice. So my advice would be go get it.
Excellent. Thank you, Pierre. And Becky?
Yeah. So I would just say, talk to your customers, figure out what they want, figure out what the next step for you as a business is. Hopefully you'll come to, you know, the realization, I suppose, that kind of that payments is the thing that really is the next bolt on to take your business from 0 to 100. And just don't be afraid of it. Payment services are not what they used to be. You don't need to be scared. They're not labor intensive anymore. And there's companies like us that can really help you out with that. So I just talk to customers and be brave.
Perfect. Thanks, Becky. And Tom?
Yeah, just be bold and use the product or service yourself if you can, because that's going to give you the best insight.
Yeah, absolutely. And David, closing thoughts from you?
So I think, you know, we've had some great kind of solutions here today. I think, you know, Tom made a particularly great point about, you know, trying to do too much at once. You know, pick a client need and, you know, deep dive on addressing that, and then pick the next client need. I think it's really, really easy to fall into the trap of I've got to do all of them in one go.
Yeah, perfect. Excellent. So we are only 2 minutes over. So thank you ever so much, everybody, for hanging with us. Thank you for joining the session. Thank you to all of the panelists and my co-host David for joining and sharing your insights. I've found that incredibly enlightening. It reinforces all of the things that I thought before this call, that this is absolutely the place that firms should be looking right now if they want to build more competitive advantage into what they do, help their clients with more value. And I'm sure that we have a really exciting 2022 for payment innovation. So again, thanks ever so much, guys, for joining us. Hope everybody found it useful and enjoy the rest of your day. Thanks so much indeed.
Thanks very much. Bye.
Take care.
Bye.
Thank you.
Bye-bye.
Thank you. Bye-bye.